Welcome back to my channel. My name is Charlene Randall, and today we're going to talk about write offs and why you should actually write off everything that is possible on your tax return. Basically, when you are writing off things or deducting things off your tax return, you are making sure that you are getting the closest to the least tax liability for your income that is possible. So you should write off everything. So, according to Section 162A of the IRS tax code, this section allows businesses to deduct ordinary and necessary expenses paid or incurred during a taxable year while carrying on a trade or business. Common deductions include salaries, travel expenses, operating costs. To qualify, expenses must be reasonable. So you can't just write off anything just because you feel like it. It has to be reasonable, related to your business, or used in your business or for business purposes. Must be reasonable, as we said, directly related to business operations, and also substantiated with proper documentation. So, a lot of times people may get audited for certain things, or sometimes, let's say sometimes, people may even get audited because they do not have proper documentation uh, to document deductions that they are trying to take. So if you do get audited, you want to have all of your deductions and receipts for all of the write-offs that you are planning to take. So basically, what are some deductions that you may make as a business owner? Salaries. Salaries are deductible. Reasonable compensation for personal services. So you may deduct salaries, travel, expenses for meals and lodging while away from home for a business. Cannot be extravagant or lavish. So this means that you just can't take any trip and say that it's for business, or you can't do something and say that it's for business. It has to actually be for business and written down with receipts that it is related to business. General expenses include rentals, supplies, and repairs. Taxpayers must maintain records. So invoices, receipts, bank accounts, cancel checks, things like that that can prove your deductions that you want to include. So, what are some deductible expenses? So, some deductible expenses include advertising, marketing costs to generate business. So, if you have to spend on generating business or marketing costs, you can deduct that. You can also deduct professional fees. This is payments to lawyers, accountants, or consultants. So you have to think in a business sense when you are hiring people. So if you are hiring a tax strategist, you can actually deduct that as a write off in your business. Okay. Operating costs, business related auto expenses, office rent, and supplies can also be deducted. Home office. Now, this is a big one because the IRS recognizes that a lot of people are doing business from home. And so, a portion of home costs, if the space is used regularly and exclusively for business, can be deducted when you are preparing taxes. Commuting, daily travel between home and regular workspace is generally not deductible. Entertainment. cost for concerts, sporting events, or golf outings. Now, those are not deductible. Commuting and entertainment, concerts or sporting events, those are not deductible. So there are certain things that the IRS will allow, and then there are things that are just not allowed. But there are so many things that are allowed that can help you maximize your deductions. There are things that will lower your actual tax liability. Okay, so these are questions that a lot of people ask. And now I'm telling you about business deductions. You can only deduct business deductions if you have a business, right? So if you do not have a home business, you cannot have home uh, business deductions. Well, if you have a home business, you can deduct home business if it's exclusively and regularly for your business use. But business deductions are for business owners. Personal deductions are for personal uh used for personal individuals that are not business owners. Okay, so some personal, let's just get into a few personal deductions that you may have on your tax return. You want to maximize any deductions that you have to have a lower tax liability. Okay, and that makes it so that you keep more of your money. So personal deductions include medical and dental expenses, costs exceeding 7.5% of your adjusted gross income, including travel, mental health, and dental, are deductible. Taxes paid. Taxes, state and local income or sales taxes and property taxes up to $10,000 combined. Keep in mind that some of these will change year to year due to tax laws and new tax law, the tax code. Mortgage interest and points. Interest paid on loans to buy or improve your home are deductible. Charitable contributions, donations to qualified organizations. So, donations to qualified organizations are deductible. So, these are also things that you need to do. It is possible to pay less taxes than you may think, just utilizing the tax code and making sure that your tax strategist is doing everything to seek out all of the deductions that you will qualify, like we do for our clients. So, make sure that when you are getting your taxes done or when you are preparing, if you know you are about to make a major purchase, you definitely want to consult with your tax strategist. If you are about to buy a new vehicle, if you are about to purchase a home, if you are basically doing everything, even if you are starting a business and you don't have a business yet, you want to start to keep in communication with your tax strategist so that you may be able to write off everything that is possible, because you are trying to get the lowest liability. And depending on your income, things will change depending on your percent of income bracket, your income bracket, and the percentage that you fall under the guidelines for the year. You may have differences. Okay, so you want to make sure you write off everything. If you have any questions, you need to speak to your tax strategist about this and make sure that everything that you can write off is there. Now, the best thing about getting all the write offs you deserve, or one of the best ways to be able to do that is to start early. So start early and ask questions about things that you are looking to do or looking forward to that may involve your finances or your business. So make sure you like this and like this page, like this video, subscribe to this channel, and make sure that you are getting all of your deductions, that are possible. Have that conversation with your tax strategist, because let me tell you a little secret. Most people just get their taxes done and they don't get their taxes done the right way, and they miss out on a lot of deductions and write-offs, which are causing them to owe money or pay out more money to the IRS than they should. So I want you to know this ahead of time so that you can get ahead of the curve and be able to make the best of your tax income preparation and planning each and every year.